What do high interest rates, a flood of new builds, and a global unrest in geopolitical issues have in common with the real estate market? Well, they kind of make it very crazy. In this video, we're going to be discussing the current state of the real estate market in America and how you can benefit from that current situation, as well as we're going to try to predict how prices are going to be developing in the future. So you need to watch this video until the end. We'll continue right after the intro. Hello and welcome to yet another video from Bloomberg Capital. My name is Patrick and I have my colleague Henrik sitting right next to me. And today we're going to be discussing the current developments in the American real estate market. And we're going to start with establishing what is the current state, what is the current status quo. And for that, we have brought you a chart of the median home price in nominal terms for American housing markets since the 1970s. And what we can see here is that we have been on a tear since the 70s. We had a bump in the road in 2008, and now we find ourselves at yet new extremes. The Q1 price data of 2025 was released recently, and we can also see that prices even went higher despite the conflicts that are currently happening on the world, despite the high interest rates in America that you would currently be receiving. At the moment, we're sitting at 8% interest rate on your 15-year mortgage, and therefore we are in a quite crazy situation. Henrik, why hasn't the price come down yet? Because I would imagine that if interest rates rise, we should see a price decline. Why does the price keep on going up? And is there an end in sight to that trend? Should the viewers be buying houses right now? And what is the best thing to do?
Well, there is actually one very good reason why the housing prices in the US have not come down, while in many other parts of the world they have. And that is that basically on the seller side of things, many people have locked in very favorable loans at very low interest rates, which leads them to believe that they can just simply wait everything out and hold onto their houses forever. But this might not actually be so true, because basically the second that house prices start to stagnate or maybe even come down a little bit, and the higher maybe interest rates start to rise, the more panic might spread among property owners, which would then start to sell. So if even there's a small fear that prices might drop soon, even slightly, could lead a lot of people to rush to sell their houses in order to avoid a crash. But is there any reason for such a fear or any indicators that would lead to that? Actually, there are. And the biggest factor in the current real estate market is the imbalance between sellers and buyers. This is especially true for commercial real estate, where the discrepancy is the highest. On the other side, for residential properties, there is still a bit more speculation and demand though, but you will have to also consider some differences in different parts of the US. So if you look at, for example, in the South, prices are falling there, especially in Miami, where you pretty much have free sellers for every buyer. Now, the West seems a bit more stable. In the Northwest, you even have some rising prices, but in general, there are 34% more sellers in the market than buyers, which naturally puts a downwards pressure on price. And in general, housing inventories are rising again after having drastically declined in recent years. We now might start to see a reversal as supply is growing once more. So if we continue thinking about this, that it only really needs a small push for a lot of sellers to come into the market, which we are already seeing, then we also have to look at the buyer side, where if also a lot of buyers are coming into the market, then they would be fine. But there are a couple of problems here, because we've seen tremendously rising interest rates, which make it increasingly difficult for many buyers to afford a property. Let's just break it down with a simple example. Let's say you take out a $500,000 loan over 20 years at a 2% interest rate. That would result in a monthly payment of about $2,500. Now, if I receive that amount as rent from a potential tenant, then I can just lean back and let the tenant pay off this mortgage, which is what a lot of people were basically looking for a couple of years back. But now, if the interest rises to, let's say, 4%, then the payment jumps to around $3,000. Now that means I suddenly have to cover $500 out of pocket if I rent out this property. But now if we look at the actual situation that is happening right now, we see the interest rate hasn't risen to 4%, but even higher. Most people are actually locking in their mortgages at 8%. And if you then add the incredibly risen prices on top of that, I think it's very clear that most people can just plain out not afford a home right now. Now add in a larger sense, the general financial uncertainty exacerbated by political tensions and economic developments. You have a recipe for disaster with not many buyers coming in to pick up the slack.
Before we get to our prediction though, just a highlight from us. We're a company that specializes in analyzing indices, for instance, the home price index, and we do our predictions for every kind of investor. So if you're looking to invest into real estate and you're not sure if you should buy right now or what kind of interest could you pay in, for instance, 3 months down the line, we make such predictions. We also do stocks analysis. We do cover the S&P 500 quite extensively, as well as Bitcoin, Ethereum, and 20 other altcoins. In total, we offer a daily analysis over 180 stocks, real estate price predictions, and also how future macro trends will develop. And we are doing this successfully since 2020. So if you do like to get in touch with us, just simply scroll down below. There is a free Discord link where you can join our community for free. Okay, now back to our prediction, Henrik. Then let's form our current prediction. So far, we have established that the path of real estate is very unsustainable in America. And we have already seen local price declines, for instance, in Miami. And we have also established the fact that a mortgage payment is getting increasingly harder to pay off. We are in for a big cycle top in the business cycle, and we believe that this is going to start in 2026 to really show in the index, because what you're currently seeing is the index, which is not an indication for local circumstances. For instance, in Miami, prices are already down, right? But this is not being priced in the index, and we should see a broad decline in American real estate prices starting by 2026. So if you think you should buy right now, I think the answer is very clear. It might be that the 2020 price that we had, where there was a small sideways phase, is actually the price where we will be in the next 4 or 5 years. And it might be better to wait to invest into real estate before jumping in and locking in the higher interest rate, which will become increasingly harder to pay off. So currently, our recommendation is actually a sell. So we are not looking to add any real estate in our portfolio, but we're also looking to take profits on some units that we have acquired back in the days that we could lock in at a nice profit. However, you might be finding yourself in a hard place, because if you are a forced seller, there might not be someone that might want to buy the house from you. So you have a problem number one there. And a forced seller is always a bad seller that has to give back lots of the gains that he might have incurred on the market. And additionally, if I am selling, I might not find a buyer very, very soon, because for the first time, listings on online websites are staying in there for longer and buyers have become very scarce. So it might even be that I might not even able to sell the house at the moment. So the best thing to do would be simply to buckle up, pay off the mortgage, and hope for better times. Those times, however, we believe are over or will be over quite soon. And a real downturn in the real estate market is very likely that should only be resolved by the 2030s. So you're looking at a time period of approximately 5 years where we will form the real estate cycle high and we will come down until the 2030s, and should be quite a feat to see, because if people thought 2008 was very bad, this has gone up even steeper. The decline might be of similar size. Therefore, we're currently cautioning our customers into acquiring new American real estate. This has been Bloombridge Capital. I'm Patrick, and I had my colleague Henrik next to me. We wish you a good week, and until next time,
here with Bloombridge Capital.